Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. Well, I just learned a new term. Actually, it's an old term called the Euphoria Trade, and it's something I thought I had experienced in high school, but evidently it's taken on a whole new meaning, and Danielle Park is here to explain exactly what is euphoric about this trade. Hey, Danielle, great to be back with you again. It's been a couple weeks.
Gary. How's it going?
It's going great. It's going good. How about you?
Awesome.
That's good to hear. So, Euphoria Trade, please explain this to me, because evidently I had the wrong take on this.
Well, I was mentioning that yesterday with the news out of the latest ramifications of the Spanish bank bailout, you know, the $100 billion fix that was floated yesterday morning, how you saw the risk-on trade, you know, blossoming out of the gate first thing in the morning. And this is what I've dubbed the Euphoria Trade, in the sense of there's a lot of hopeful traders that say, you know, oh, these old memes have worked in the past. Every time a central banker announces the latest installment of hopium, you see the risk trade goes wild. Now, it's been for shorter and shorter periods of time with each incantation of this. You know, everyone kind of expects the markets to rally, and yet they get less steam each time. So I was really quite interested yesterday to see that we're now in sort of halftime, because it came out of the gate and faded dramatically. The Dow did a 270-point switch, you know, from way up to way down by the close yesterday. So now we're down to just getting hours out of these euphoric announcements.
Yeah, so do you mean to tell me that happy days are not here again?
Well, I think it's just, you know, this is part of my theme or one of my scenarios that I think as we go forward here, every time you've had federal bank intervention in the last few years, you've had sort of big pops in risk assets, and it's lasted for several months. So some people were perhaps able to harness that in a trade, and some people stayed too long and got kneecapped on the way out. But basically, there was always some hope that, you know, that the next round of QE would cause markets to pop. Where I think we may indeed be at now is a phase where that euphoria is so short-lived that no one really can participate in it. Because, you know, let's look at the Euro bailout scenario yesterday morning that was announced. So they said, okay, we're going to lend the Spanish banks $100 billion. We're not calling it a bailout. Don't get us wrong. It's not a bailout. It's just some free money we're going to give them. And you look at who's giving the money, Carrie, it's just ridiculous. It's, for example, Italy was ponied up for 22% of that $100 billion fund. So get this. Italy, who has now got, you know, is off the charts in terms of debt and unsustainable habits of its own, is going to pony in 22 billion euros, which it has to go to the bond market and borrow above 6%, by the way, in order to turn around and lend it to Spain for 3%. And this is the ideas that are coming out, you know, as the rescue plans. And I think that's why I believe we're at the end of that rope, where nonsense is nonsense is nonsense, and no matter how they spin it, the math doesn't work. And this is what leads me back to the belief that even if we get another round of, you know, QE intervention from the Federal Reserve, perhaps June 20 this month, I think the amazing trade might be that you get that big pop in the morning, and by the end of the day, everything's deflated again. And I think that will finally be a turning point, because people will realize that they've had misplaced faith in central bankers, and central bankers cannot remedy what is wrong with this system. So
effectively, what you're thinking is that people are going to start facing reality? Is that what I'm hearing?
Well, of necessity. You know, I was writing about this on the blog this week. It's not that anybody ever likes to make do with less than they're accustomed to. We all know this about humans, and certainly from your law days too, Carrie, if anyone you were working on behalf of, whether it was in litigation or negotiation or, contract disputes, divorce, you name it, anything, no one liked to hear the news that they were going to have to put up with less money, right?
Yeah.
So that's just part of our human nature. But I always noticed that when you got to a point where it was simply black and white, in other words, you couldn't get money from anybody else, there wasn't any more credit available, this is what there was and that's the end of the story, mostly everybody adapts behavior. Always by force, probably, not necessarily by preference, but ultimately, you have one choice, as they said in the Shawshank Redemption, you get on with living or you get on with dying, right? And I think when it comes to credit, you get on with figuring it out without it, or you don't, and then you fall, but most people will figure it out. And that's why I'm more optimistic as we go forward. I've been, waiting for the day that we would get to the end of this credit line, if you will, where central banks would not be able to juice things any further, because we've already got there on the fiscal side. You've already seen governments coming up empty with, their ideas about how to pump growth in this environment. And now we're facing the facts, which is that they have to write down the debts. They have to admit they shouldn't have lent as much money from country to country, from banks to consumers. All of that has to be recognized for what it was, which was ridiculously foolish practices. And now we have to just admit that.
Yeah, so the science project, everybody's now going to admit that, oops, didn't come out quite as well as we intended. So, time to effectively cash in the chips, right?
Yes, and look at the consumer wealth data that came out. The Fed issued a new report today on the U.S. consumer showing that they have, in effect, made zero gains now for 18 years. So the net wealth of the average American consumer is back to where it was in 1992. So what, I got a kick out of some of the way that the media was reporting that was to say that between 2007 and 2010, the recession wiped out 18 years of wealth. That's part of the story. The real story, though, is in all the levering up that went on from, the 90s into 2007, which was, crazy leverage. No one should have been doing the stuff they were doing, but everyone took credit for the upside. So really the full cycle is that cycle goes manic. It implodes on itself. Asset values fall. That people fight that for a long time, desperately hoping things bounce back, realize they can't, and then get to work in terms of rationalizing that. So, that's happening with consumers. And the good news there is that not only is housing continuing to get more affordable, which ultimately will be a wind at the back of the consumer eventually when they start buying things at good prices, but also their debt levels have been coming down. So the consumer is starting to make some progress here, at least in the U.S., sadly not yet in Canada because we've been in denial a while longer, but in the U.S., and that is another positive when you look at what will be, the kindling for the next boom of prosperity in the world and in America. And there's a couple of other things. I'm writing an article right now on the comparing the investment in technology and telecom and bandwidth, everything that went in as a result of the frenzy of investment in the tech boom, right? So you look at the late 90s, there was just this incredible overinvestment in all things to do with tech and telecom. Well, of course that was overdone and it went to a sort of bubble peak. But the good news is that it left an infrastructure in place that the internet has been able to, use for the last 12 years and has been a great boon to us in terms of innovation and advancement there. I think the same thing is happening right now in the commodity sector. We saw huge obsessive compulsive investment in that sector in the last few years, And so we today have so many more sources and technologies and supply available than we had, look at 2000 when everyone had stopped investing in the commodity sector and supplies were low and it was definitely at a low point. Well, you have hyper investment for a period of time, and now we have that infrastructure, if you will, in place to support the economy going forward. So things like natural gas at, rock bottom rates will be a boon to growth as we go on from here. So I think it's important to notice that there are some positives. The bubble ballooned and burst, and that's for sure. And if you lost, a lot of net worth, you're not very happy about that. But you have to understand that a lot of the net worth that was gained on paper was only yours to rent, not own. Unless you sell at peak valuations, you can't claim that as your own. And so really it's, we're kind of gone full circle back here. Another really good thing, Carrie, is that rates today are at 100-year lows. So a lot of corporations have borrowed at the front end at these extraordinarily low rates and locked that in. Smart consumers that are not able to pay off all their debt right now are able to lock in 30-year lows in their mortgage rates, actually record lows in mortgage rates in the U.S. And if they're smart, they'll lock that in and use that as the wind at their back as they go forward because they'll be able to pay off their debt so much faster. So again, that's all very positive for growth once we get out of the delevering cycle. It's not so good for bank profits, for example, because think about that. They've loaned everybody, locked in record low rates in an environment where rates can basically only go up eventually from here. So it's not good for the financial corporations, but it's good for the rest of the real economy. And frankly, it's about time we had that ratio in our favor.
Yeah, well, people often argue, and I don't think you can really debate it, that the financial sector has kind of been feeding off the rest of the economy through this malinvestment of funds, which, it became the whole tail wagging the dog where money capital didn't go necessarily where it got the best return, but where the risk premium seemed to indicate that was the place to go. And
where it was least respected is a good way to put it, I think. Capital flowed where it was least respected into the hands of the people who knew how to manage it the least. Because when money's free and flowing everywhere and nobody cares if it gets paid back, then it goes to everybody and every mad dog out there. And, the whole trials of Jamie Dimon of late, to me, are another indicator of progress. Because Jamie Dimon has been the, rock star of the banking sector the last many years, just as Alan Greenspan was the rock star of a Fed that was plummeting rates to the record lows over his career. And then after that, you realize, hey, that wasn't genius, that was recklessness. And I think that's good to finally have that penny drop.
Yeah, we have, what happens to rock stars all too often.
I like to see the odd one who actually gets onto a plant-based diet and healthy habits and yoga, like Sting, for example. Not all of them crash and burn.
Yeah, like Paul McCartney and others. So, but that leads us. We were talking. What effect are we seeing from the economy on the election coming up in the States?
Yeah, so I thought it was interesting that the recent polls of independents now favor Mitt Romney by about 7 points over Obama. And you remember the last election, Carrie, that the independents were the big swing vote in Obama's favor. And he seems to be losing that cohort with some rapidity over the last few weeks. Now, don't get me wrong, I'm no Romney fan. I don't think that he's genius or wonderful or any of the above, but I do not think that Obama deserves a second term. And I say that with a sad heart because I, like many in the world, had great hope that he would be the emblem of change, that he would, bring forward the principles of equality in the world. And sadly, I think he was a figurehead, but his choices which have been chronicled in a whole bunch of books and articles and documentaries. He was handed on the platter the opportunity to make changes in the banking sector, the finance, the whole way in which that politics was run. And he chose instead to, go to the safe side and let them continue to be his benefactors rather than distance himself as a true leader needed to do at that point. So I think it'll be interesting if he's trying to now blame the Bush administration for the bad economy. In truth, it's everybody's fault over the last 30 years, how we got here. It's not just one president or one administration. But I think that, as the data continues to disappoint, you got the economic indicators, the ECRI leading index again last week, Carrie, moved into zero. So we're now fully contracting on that leading indicator for the U.S. economy. I think that U.S. growth is clearly stalling in Q2. In Q1, we had 1.9 on the last reading. So we were already weak, and now we're stalling further. I think that may well become Obama's swan song. And, I'm sorry, but I think he frankly doesn't deserve another shot.
Yeah, well, we're going to find out soon enough. I think there's just so many issues going on, and there's such turmoil in the global economy as well as here in the U.S., and there's a complete loss of confidence in the government's ability to really manage anything, for everything from keeping us safe to taking out the garbage to police protection, everything else. People are really concerned about it. And I think you have a right to be, because there was this belief that government could get stuff done, that government would do things and make our lives better, make your life better. And here we are, and it hasn't worked out that way at all. And
the problem is that true leaders, like the strength or the weakness, let's say, of leaders is often not revealed until a moment of crisis, right? So everybody looks like a genius when times are easy, or as when I was writing today on the blog about, the levering up phase where everyone exceeds expectations because growth is always higher than the quarter before and the quarter before. Why? Because they keep adding debt to the system. And so growth always surprises to the upside. So everybody kind of rides that wave, takes full credit for that. And then it's not until that bubble bursts, which it always does, that everyone looks back and says, well, geez, you were supposed to be in charge. What the hell were you doing? Why did this happen on your watch? And then they say, well, it's not my fault. It's, the economy is bad. And so I think that hopefully, we'll stop putting blind faith in any one government and realize that the only thing we have is the discipline that we can invoke through behavior, through restraining credit growth, through having some decent regulation in the banking sector. We've got to go back to some kind of a dividing line between politics and things like finance. This revolving door stuff has been the death of us, and I think that we do need to try and reestablish some decency there, some apprehension of fairness, which we have so got away from. But hey, the recession is a great learning opportunity, and we're about to have another global recession, I think, which means that revenue forecasts are presently all overly optimistic. So we're going to get into a period of lower revenues, which will equate to higher deficits, which will just magnify the debt problems, which is why I'm pretty confident that we're not going to be able to paper this one over. This is not your garden variety recession where we're going into it with high rates at the central banks that can be all slashed to re-stimulate, and consumer savings that's been squirreled away, where now they can draw down on that to sort of mediate our way through the downturn. We're down to t-shirt and a pair of shorts, as I've said before. It's not going to be hard to fluff our way through. It's not going to be easy to fluff our way through this one, and I think that will force certain things to be recognized about the way we were doing it in the past.
So pump priming, money printing isn't going to get us out of this.
It's not going to get us out of it, and I think that the hope has died on the belief that even was a solution. Again, it's a relative thing. If you're relatively underleveraged and you have relatively little debt, certainly adding a bit will help, in terms of growth. If you have high interest rates and you begin to cut them, clearly that will be an assistance to the economy, consumption, and the demand cycle. But those are not the conditions we are in today. And so I think that those rabbits have been fully pulled out of those hats. They will continue to be disappointing. They will not have the shock and awe that we've seen in past cycles, or indeed as they've sort of commanded over the last few years, which means we'll finally get to the revelation phase of now it's simply take off a bunch of zeros and try and get to the truth about what growth really is. What can we actually afford? We've made so many promises that can't be kept. So there's one school of thought that says, oh, well, governments will never admit that and they'll just print indefinitely. I don't believe that, because it's not sustainable in a world where everybody's trying to do that at the same time. If you were just Greece and you needed to lower your currency and you'd go back to the drachma so you could get some deflation in your economy and attract outside investment and tourists and things, that's one thing. If you're the entire world that's having the same problem at the same time, who's going to buy your debt, for example? Who's going to have constant flows of capital in a world where trade deficits are going to plummet because there's not as many people buying? So, at some point it is a closed mathematical loop, and you can't get credit from another planet. So you have to deal with the resources and the demand that's actually here. Yeah,
well, so that means a wake-up call, and that means a whole new way of doing things again, right? Totally different.
Yeah. Sure, but we've learned this before, and we have retrained ourselves. And, I put the documentary Regeneration on. I watched it last night with my kids. I think it's worth watching. I think that the trouble with generations, and this is not just our generation, I think this is always, the older generation always, wants the status quo to continue because they have a vested interest in that. They're the ones that typically have some capital and some assets and, have benefited from existing structures. So they basically always want, the status quo wants things to pretty much continue the way they are. But the younger generations, have nothing to lose in many ways. They come up and say, I can't get in this treadmill of demand because I can't get decent employment. I can't afford housing. I can't afford to participate in your consumer, hopes and dreams here. And so that's what is the great moderation. The young people will not be able to pay for all the entitlements that have been promised. And the boomers can stamp their feet like any, person that doesn't like the facts they're dealt. But at the end of the day, the math has to dictate what gets done.
Yeah, and hopefully this wake-up call is going to come sooner rather than later, because the longer it goes on, the higher the tab and the bigger the losses, and the more potential for civil unrest and some really hard times for a lot of people, the people who are most vulnerable and can't afford it, right?
Yeah, on the other hand, that's the sector that's taken it in the teeth the hardest the last few years, quite honestly. The people that have to now admit or recognize that they have not got away with murder, in my view, are the people that have benefited the most from this, misshapen system. So call them the 1% or call them the, whatever, the elites, the financial elites, but there's a whole bunch of people that have hoarded a bunch of assets, and those are the ones that are trying to maintain the status quo. They don't want to see their net worth written down, but guess what? Everybody else's net worth is getting written down. It's a relative decline. Everyone's got to give back profits and money that should never have been there in the first place. So this whole printing that's been going on for the last many years has benefited some people with asset appreciation, and those are the people that now have to admit that that was kind of funny money. It wasn't all really, organic or lasting. And so I think that's the phase we're in now.
Yeah, those elites, though, are the last ones to want to give anything up. And, it's hard to call upon your fellow man, your brother, your sister, and ask them to go without when you see a government that is all over the world, totally out of control, have totally lost their way, and have no concern about bringing rationality, if you will, back to the system. Yeah,
but I resist this carte blanche blaming of government as if they're a species from another planet. Government are us. Government are the people who vote, which tends to be the more affluent members of society. They're the ones with the lobbyist dollars to direct policy. They're the ones who participate in elections. They're the ones that have a say. And those are the ones that are now trying to back away with all their, spoils of the battle and say, oh, well, now it's up to governments to fix this. No, you guys were part of the problem. We have to admit that. So now we have to be part of the solution. And nobody gets off scot-free in this, in my view. You can't lead a bunch of people over a cliff, counsel them to their own demise, and then stand back and say, geez, what's wrong with you guys?
Yeah, the Pied Piper. Gee, why'd all you guys go off the cliff like that? What a shock.
What do you mean you were going bankrupt buying stuff you shouldn't have bought? I didn't know that. No, I know, and you didn't care either.
Yeah. What a great thing. Well, yeah. What an incredible world in which we're living. But I do think there is a lot of cause for optimism and hope for the future, because I do believe that man, while he doesn't always learn directly from the future, and people say the only thing we learn from history is that we don't learn from history, I don't think that's altogether true. I think there are lessons that are learned over time, but that people don't always get it, and it takes a couple of times for it to happen before they do. So anyway, Danielle, what do we got scheduled in Juggling Dynamite? Anything good on there?
Oh, yeah, lots of good things. Goodness, I'm just hand over fist with content these days. Mostly I can barely get on all the things that I think are worthy of comment or notice, but there's a steady stream, and it's common themes, and it's worldwide, and it's fascinating. And you know what, here's one last thought, Carrie, survival of the fittest. That means, and I mean that in the kindest possible way, we can learn from this. You can adjust your ideas and behaviors, and if you do, you will be part of the solution going forward, and you will prosper in the new world. If you can't, well, then you can't, and I wish you well.
Yeah, well, there's always winners and losers in every systemic economic uprising, uprooting, and there's going to be winners and losers here. But if you choose to be a winner, start doing your homework now, because it's there.
And you need to protect yourself until some of these, massive tail risks pass. I mean, the worst thing you can do is stay fully loaded on risk and not adjust any of your business model or any of your spending or any of your ideas, and then get creamed. You want to be proactive in that. Absolutely.
Well, Danielle, we got to take off right now, but to hear this interview again and many others that Danielle and I have done in the past, financialsurvivalnetwork.com. Sign up for the free Financial Survival Toolkit, which addresses a lot of these issues. Get the newsletter and keep going to jugglingdynamite.com. All right, Danielle, we'll talk to you in a couple of weeks.
All right, Carrie, thanks.
Well.